Devang Mehta also joins us on the show right now. Devang, hi, good to be speaking with you. What's your take on the market right now? Every day we are making a fresh record high. Today was a similar instance. But within this kind of construct, is it better to place your bets on large caps, or do you think mid cap and small cap have more steam to go?
Good afternoon, Anisha. Thanks for having me on the show. I think the view on the markets is honestly, we've been seeing that in the last 2, 3 months that there has been small corrections on the anvil which are getting bought in. I think what seems to have changed is the commentary of the managements which we saw in the last result season, that they were also getting increasingly positive. More often than not, what has happened is the past 1.5 year, it was only capex driven businesses which were doing well. But if you look at the last 2 months, particularly post the elections and post the budget, even the consumption side of the market has started to do very well. So the absent sectors which were absent in terms of participation, like IT or like even pharma, as well as consumption, along with the capex side, has started to do well. One part which is still not on its complete mojo is the financials, which of course are trying to make a comeback, courtesy the FPIs. I think last week, if there is an indication to be taken in the medium term, there was precisely buying of around $2 billion from the foreign portfolio investors. So I think markets are going from strength to strength, and that's always where I always take out this quote from someone's book, which says that more money has been lost in anticipating a correction or waiting for a correction than in correction itself. So I think probably yes, so many primary issues getting absorbed, stellar listings, most of the businesses doing well, sector rotation coming to the fore, DII is present, FII is coming back. I don't see many reasons for market to correct in a large way.
Okay, that's the take coming in on the market right now. Dixon still climbing up, almost a 7.5% notch up right now. The market-related themes, the exchange names, they're all doing well. We've been marking the move in MCX as well as BSE. Devang, it's a large pool, right, of the market-linked stocks which are listed. Wanted to understand what are your preferences or any biases?
Yeah. So, Aisha, what has happened is, in fact, as you rightly said, financials are now probably divided into two parts. One are companies which are sort of market linked or market intermediaries or capital market related themes. And these themes have done extremely well, right from a listed BSE to a CDSL, to a lot of these broking firms, to wealth management firms, to even AMCs. I think most of these businesses had their time in the last 2, 3 years. You are seeing more and more financialization coming to the fore. You're seeing more and more demat accounts getting opened, more and more people putting money through mutual funds, SIPs, people putting money into PMSs, and more people in India generating wealth, right? So the number of millionaires and billionaires are on the upswing. So I think yes, as a space, we have been bullish on depositories, which I talked about. Even exchanges, we've been sort of liking. Of course, there is one listed and another one is still unlisted, but we have been liking this space. In fact, even the wealth management and the broking space. So these are some of the themes that we've been talking in financialization. Yes, there are a couple of themes which are still to perform. Something like an insurance, which has sort of performed partially well, but valuations over there are also seemingly probably a little more stretched. And banks and NBFCs is one theme which has still not got the run which it saw 3-4 years back. But yes, financial intermediaries, wealth management space, broking, and this probably will do well for the next 2-3 years till when financialization has probably made a deeper inroad than what it has right now.
Could be a medium-term theme that you should watch out for. But when I wanted your sense regarding some of the metal names, do you see any of the re-rating candidates? Question is for you on metals.
Yeah, so metal selectively doing very well. Especially I like Jindal Steel and Power, which is looking quite strong on the chart, and it has taken a lead. So Jindal Steel and Power is looking the strongest to me. Though JSW Steel is another stock which is looking very strong on the chart. So as compared to Tata Steel and SAIL, the Jindal Group companies are doing very well. So Jindal Steel and Power looks strong to me. In fact, a couple of days back, we recommended to our trading the clients, traders, and it has done well. And still, I think that it is into a uptrend, and it is likely to register an all-time high, which is placed around 1094. So still, I see a 5 to 7% upside in the stock like Jindal Steel and Power. And I can see some sector getting traction again. So sector-wise also, it is a reversal case, and definitely I'm expecting participation from the metal sector in the coming days. So overall, I see Jindal Steel and Power doing good, followed by JSW Steel, and metal sector is also as looks like it is a bullish reversal pattern on the daily and short-term chart. So yes, there are many opportunities in the metal sector, and one of the stock is Jindal Steel and Power, which can be traded now with 5 to 7% upside target in the short term.
What Macrotech is up to, the House of Nomura, of course, initiated a buy, target price of 1600 on this one. Some solid earnings visibility with the right capital allocation strategies is what they're anticipating, and they do expect the pre-sales growth at a 20% CAGR over FY25 as well as 26. But Devang, it's a well-discovered story, right? Real estate. Where within this are you still scouting for opportunities, if at all, either realty or the ancillaries?
Realty has been a revelation, Aisha. If you look at the last couple of years, most of these companies have come out of nowhere and sort of started to show sales which they have never seen. In fact, look at the registrations that are happening in Mumbai month over month and also other cities. And I think most of the inventories are getting absorbed, and that too even luxury homes. For example, now Macrotech more so operates in the luxury part of the world where there are 3 BHKs and 4 BHKs and 5 bedroom all kitchens which are getting sold on launch dates as well. So I think yes, this still a good time to probably as the wealth effect I was talking about in the last question on the financial intermediaries. There is a lot of wealth created, and people are diverting this money not as an investment, but they are upgrading their lifestyle and getting into good houses. So yes, this theme will do well. But to answer your question, which type of theme should one play it? Also something like a fast moving electrical goods, which we have been very vocal about. Companies like Havells, companies like Polycab, not suggesting as buys, but yes, these are some of the portfolio businesses that we hold since long, and these are companies which will tend to probably do very well. We know that most of this FMEG businesses, fast moving electrical goods, have come up with good set of numbers, and management has guided towards a very, very strong growth. Even cement companies, though they went through a temporary slowdown, but yes, still probably if housing as an industry is going to do well, infra as an industry is going to do well, cement, some of the large cement players should also be considered.
Okay, point taken. So that's the view coming in on some of the ways you can probably play the power sector theme. But in the meantime, sugar as a space has been buzzing as well. We did speak with the ISMA, management to talk to us about what they make of the move that we have seen so far. And of course, the fact that there is an expectation that the ethanol price is expected to come out soon as well. They're working with the government for a revision of the ethanol pricing. And as per them, it can be expected anytime soon as well. Devang, what about this entire agri theme? Would you be a buyer, let's say, in textile companies, some of these sugar names, this entire ethanol play?
No, not particularly. We probably are not into this type of cyclicals. So on the agri side, if you asked me, yes, we know that there is a rural recovery which is coming back. A lot of this FMCG players, a lot of food and beverages players are where we have our sights set into. There are also this agricultural related, I can say, agri as well as specialty chemical companies, companies like PI Industries, companies like Sumitomo Chemicals, which are part of our portfolios. I think these companies have come up with good set of numbers. Again, as I said, we have seen a relatively stable environment coming back again. We saw 2 years of a deep correction, hibernation for this type of businesses. But with this, I think the agri theme seems to be coming back with that. Even FMCG, agrochemical type of companies, companies related to agriculture, this all probably should do very well.
Okay, from agri commodities to now precious ones, gold continues to soar at an all-time high. In fact, Ashesha is here to tell us all about what analysts are saying about whether or not it's going to continue at these elevated levels, and of course, factors behind the move. Ashesha?
It continues to touch all-time high levels for the second consecutive session. In fact, on Friday also it touched all-time high levels, and today it has crossed that $2,580 per ounce mark, and what a rally it has been. On a year-to-date basis, gold is now up nearly 32% and in the last 1 month alone we have seen gold rise by about 3.5 to 4%. Buying by central banks globally, softening US dollar, and apart from that, of course, we have that all-important Federal Reserve meet on the 17th and 18th of September, and hopes of a 25 basis point rate cut is also leading to the rally in gold. And apart from this, high demand in the O2C market of gold is also leading to the surge. In fact, Goldman Sachs believes that the run-up is expected to continue. Even after the run-up that we have seen over the last few days, they expect 2 $2,750 per ounce is the target that they've given for early next year. It continues to be their preferred long-term bet, and it also is a good hedge against inflation and economic uncertainties that the world is facing. So yes, a positive report that has come in from brokerages, and gold continues to scale past that $2,580 per ounce mark.
Okay, point taken. And yes, gold is definitely glittering in the trading session, has been inching towards record highs, has been making actually fresh record highs as well. The other theme, however, has been crude coming off, and the fact that it has stayed between that $68 to $72 a barrel. So the top beneficiaries, of course, is aviation sector. Today you had Jefferies adding Indigo in their model portfolio as well, paint companies, etc. In fact, we did speak with the management of Akzo Nobel as well. When I wanted your take regarding a couple of these big sectors, paints, while there's a tailwind of crude, crude coming off, seems like volume pickup hasn't really been there. So what's the take on the charts?
This Asian Paint and Bajaj Paint, which are the biggest company in the paint segment, they have shown us a spectacular rally, and they are sustaining at higher level, making higher tops, higher bottom. So this time, I think these paint companies are going to sustain and looking for the larger gains. So definitely from the lower levels, from the low which was seen in the May 2024, Asian Paint has risen significantly. From the low of 2638, it has risen to 3337 right now. So in last 5 months, Asian Paint has given and registered a very good rally, but still I feel that this is a bullish reversal case, and the FMCG space, I think paint companies are going to sustain, are going to give good returns. The another thing which is likely to get benefit out of this is the tire stocks. So in tire segment, I like CEAT a lot. So CEAT is looking very strong, very resilient. Also, if we compare it with the other tire stocks, CEAT has been very strong. So CEAT, which is trading at 3,000 odd levels, I think that it is going to do very well in the coming times. So we can expect 8 to 10% upside in the immediately looking at the technicals. So I'm bullish on CEAT Limited, which is going to benefit from the lower crude price, and 10% upside could be there, and traders can watch out the support of 2850 as a stop loss also. So overall, I feel that paint companies are going to sustain for the bit medium to long term, and tire companies can also participate. CEAT is one of the best stock, I find it technically.
In fact, since we're talking about some of the crude beneficiaries and we did mark Indigo, take a look at SpiceJet. That stock has suddenly spiked 8 to 9% in the trading session right now. So that definitely deserves mention. In fact, it's up almost 9% as we speak. But here are what the management of Akzo Nobel had to tell us earlier with respect to the impact of crude and what they are witnessing with respect to demand trends.
For us, we've got a very clear focus strategy to deliver growth and be in the top two in the incremental growth. As you've seen in the quarter that went by, we are focused on that at this point of time. And between all our verticals of paints and coatings, we are trying to make sure we do it. How are we going about it? You may have just read. We've just announced an addition of 5,000 ton capacity in our Gwalior for our powder business. That's one of our fast-growing business. And now with the capacity augmented at Gwalior, we should be able to serve our customers, particularly in the northern and eastern part of the country. And the team is doing a fabulous job. The same for our paints business, our marine and protective business. Our focus is really to drive the growth and be in the top two on growth.
Okay, point taken. So that's the management of Akzo Nobel. In fact, let me bring on board Sharad as well to talk to us about the Swiggy IPO, because that's expected to hit the bourses anytime. In fact, the company is likely to file this week itself, and that would mean more competition coming in for Zomato as well. Let's pull up perhaps Zomato stock price as well, because I'm not talking about Akzo Nobel, the graphics which are there on the screen, but let's pull up in fact Zomato, because that's the stock which is right now perking up 3% higher as we speak, and that could be perhaps a bit of an excitement that it's going to get appear in the listed space. Sharad, tell us what the expectations are with respect to Swiggy, the valuations, when it could hit the bourses.
Well, as a softback, Swiggy is expected to file its IPO papers this week. This is coming at the back of some media reports, and it's expected that they would be raising $1 billion. That's roughly more than 8,400 crore rupees. Also, the expectation is that the SEBI approval is awaited for this, and the details of the offering and the timing is still not decided yet. Now, of course, it's expected that the company is aiming for a $15 billion plus valuation. Also, the key shareholders in Swiggy, they include the names such as Prosos, SoftBank, Elevation Capital, GIC and Tencent, and also Qatar Investment Authority. Now let's see how Zomato and Swiggy, they pair up with each other as per the FY24 numbers. For revenue itself, it looks even Stevens at roughly 1200 odd crore rupees for both the companies, but Zomato has turned profitable and Swiggy has not. The average order value is also coming at almost 428 rupees. If you look at the other operational numbers, the monthly transacting users, the restaurant partners, the cities where both the companies are present in, they generally are seeing that Zomato is having a higher share going ahead. And also, speaking of which, market share is something which we'll be watching out for, where Swiggy is having almost 46%, while Zomato is having the lion's share of almost 54%. Now, of course, the valuations is something which we'll be looking out for. Zomato in the current market scenario is having a $29 billion valuation, and that itself, from our unlisted channel checks, we got to know that the Swiggy's market valuation could range between 15 to almost $18 billion. Also, the quick commerce, that is also everyone is looking out for. For Swiggy, it's Instamart. For Zomato, it's Blinkit. And over here itself, the revenue part, if you look at it, Swiggy is still half as compared to Zomato. But the city's presence and the number of dark rooms, that's also almost equal when it comes to both the players.
This is going to turn out to be, of course, a very watched IPO, much like Bajaj Housing as well. Devang, just wanted to get your thoughts in on the kind of valuation that Zomato is currently quoting, and we don't know what pricing etc. is going to be the detail of for Swiggy, that is. But just wanted to understand, given that these are the only two players in the market right now, how is it that you would stack up Zomato's valuations?
See, honestly, on the valuation front, if you look at both these businesses, they would probably trade at a bit of a, if I can use that word, crazy valuations. Why? Because there will always be a scarcity premium for this type of businesses, and we know that at least Zomato is now that way profitable, and in fact, Blinkit has done very well. The apprehension that the people earlier had when the IPO of Zomato had come, and you saw the seesaw that happened on the stock price, both on the upside as well as on the downside. That was because, yes, India still more or less values companies on profits rather than on revenues. So once the operational profit starts to follow and the net profit starts to follow, I think then the valuation actually starts to sort of develop a little more. I think what people have seen is that these models are quite successful, right? So a lot of these models have even made restaurants successful. So right now, the ordering activity in India, and you look at the per order realization for even a Zomato or a Swiggy that have been on the rise. So the sense one gets here is because these are only two companies and the second to get listed. Both of this would, in the shorter to medium term, be beneficiaries of a duopoly that persists. And of course, then the race will be more who grabs the market share a little more and who retains the market share. I think that will be worth seeing. But yes, as I said, we would probably be a bit more, we'll watch the space rather than immediately jumping the gun and getting into one of those.
Point taken, so not jumping the gun, but waiting and seeing what really turns out to be the case. But time for the BTSC trade. Naresh, what's on your buy today, sell tomorrow idea list?
So first is a buy on Info-Edge Naukri. The stock has hit a new all-time high, good momentum here. Stop loss at 78.40, target price of 8,000. Second is a buy on Marico, again a new 52-week high here. Stop loss at 690, target price of 705.
Okay, that's a Marico and a buy on Marico as we speak right now. Devang, where within FMCG are your preferences?
See, ideally, what we have seen is a couple of businesses, for example, food and beverages. Just giving a classic example, again, not recommending, but we have a portfolio company in Varun Beverages, which we know has delivered around, I can say, the last 5-6 years have been stellar for the company. And since listing 7-8 years also, I think people who have sort of got even allotment would have made the 17-18x. And I think the company venturing out into the operations in South Africa as well as the Indian operations also doing very well. I think, yes, this is one which probably is a re-rating candidate, and I think it's into getting into segments which are sort of unexplored so far, and the segment size, the opportunity size is also rising, and the market share is sort of also rising. So I think these are types of businesses which one need to look into. Having said that, even traditional FMCG businesses which operate, which are typically large cap, the HUL types or the ITC types, there is also a tinge of recovery seen over there in terms of management commentary as well as body language. And even if the rural consumption pattern changes post-elections, post-monsoon, I think the next 2-3 months in the festive season, I think a good volume growth can be seen in traditional FMCG type of businesses as well.
Okay, that's the take coming in on FMCG right now. In the meantime, Devang, have to talk about Bajaj Housing. What a listing it has been, and it's still holding on to that 135% kind of gain. For those who were lucky to get the IPO allotment, what did they do now after today's gains? It's at 165 now.
Valuations would be stretched if I try and analyze or get more into analysis. I think it is clearly around say 6.5 times, which is expensive than most of its peers. But what supports Bajaj Group is very typically the heritage of the Bajaj Group, the wealth creation that has happened inside the group, the management quality, the integrity, as well as the industry that it functions into, right? We talked about financialization, we talked about real estate. Now, what better proxy play than a company coming out from the Bajaj Group and being a pioneer into sort of housing finance? Of course, the base is still lower. What supports this company is, I think, the base being lower, huge database that this company has, and I think the trust from the investors as well as the trust from the community who sort of borrows from that is also something which would help. As I said, these are more qualitative parameters. Quantifying this is difficult because as we see, right from Ola Electric to a lot of the host of companies which got listed in the past I can say 7, 8, 10 months, have sort of again exceeded expectations. So I think I'll not put anything to the table immediately, but it's a hold for somebody who has sort of got allotment and somebody who wants to buy. This is a great company, good company, but you probably can wait for a bit of a correction if somebody wants to get into it.
Point taken, but since we're talking about Bajaj Housing Finance, hear out what Ravi Dharamshi has to say, because the valuations now are close to or actually over 5 times price to book on this one, making it the most expensive housing finance company listed in India.
In the short run, market would be ending up factoring in a lot of the positives, and it will be difficult to justify these kind of valuation, and earning returns from them over a longer term period becomes difficult. However, there are technical reasons why this overvaluation is happening. With HDFC Limited becoming part of the HDFC fold, there is actually no large mortgage lender separately listed. So that will mean this stock will become a must own for most of the funds, and it will become part of most of the indices, starting at a 1 lakh crore plus kind of a market cap. It will become part of the large cap indices, and it will all the foreign funds will also look to buy into that. So from that perspective, I can understand why it is happening, but at the same time, I mean it becomes very difficult to generate outsized returns from these valuations going forward.
Okay, that's Ravi Dharamshi also talking about what to now do with the Bajaj Housing Finance listed shares, which made their debut today. In the meantime, it's really status quo. We haven't really moved much in the last half an hour or so. Still holding on to that 71 odd point gain on the futures. 25,444 is where we're currently at. Bajaj Finance rank underperformer today, 3.25% downtake. Unilever, SBI Life, Britannia, Adani Ports, Titan and SBI are some of your other laggards. In fact, it's quite intriguing that SBI perhaps is the only banking underperformer today as opposed to what the private banking lot is doing, because everything from an Axis to an HDFC Bank, they're all holding out pretty okay in trade. Axis, of course, has made a fresh life high as well. Devang, any stocks very quickly from within the private banking pack which you think can be bought?
Honestly, if you ask me today, what is the construct of our portfolio immediately, we are not buying banks as such very aggressively. Yes, in a traditional multi-cap, large cap portfolio, we hold certain banks like ICICI or even an Axis Bank for that matter. But today, if I construct a new portfolio, there are so many different themes available, as I said, across capex, across financialization, across consumption, that I would immediately not vote for a bank. Yes, as I said, there are FPIs who are going to come into the picture sooner than later. These banks which have underperformed over the last 2-3 years horizon, they might come back to the fore. But as I said, if the objective is to generate 18, 20, 25% type of return over the next 2-3 years, this is not the space that immediately I would get into for material gains.
Devang, on that note, we let you go. Thank you so much for making time and speaking with us. Naresh, you as well. Thanks so much for joining us today.
If you like this video, then like, share and subscribe to ET Now.